It's uh, I've enjoyed it myself, being able to get a lot of information at once about, different areas
Yeah,
that I have no knowledge of, right?
yeah,
Rehabbing and a bunch of other stuff like that. So, um,
yeah.
is there, since right now it looks like you're the sole attendee, is there something that you would like to go over, or do you want to just go through what we have here, or tell me what's on your mind?
Um, so I'm in the San Francisco Bay Area, and I'm just getting started with wholesaling. And I just want to, absorb as much information surrounding that or anything else that has, um, to do with it.
Okay.
So I would like to know whatever I can know and as much as you have to give.
Okay. Fantastic. Happy to do that. California has, believe it or not, a pretty active trade in seller held mortgages,
Yeah,
and uh, like really active, which is in a way kind of surprising, right? Because it's kind of known to be pretty heavy on regulation, right? That's one of
right,
its, aside from being probably the most beautiful state, it's also probably the most regulated state, right?
right.
Uh,
I'm still learning all these things as well. It's like it's so many restrictions and stuff.
yeah.
It's like, come on, people. So much to know surrounding real estate, period, though.
Oh yeah, it's a lot to take in, and so we'll tell what we can do is we can start, and welcome aboard, Tiffany. I've unmuted you so you can talk if you'd like to. I was talking to Michelle, who's out of the San Francisco Bay Area, and
Hi,
go ahead.
Hey,
I'm
hi, I'm
sorry.
Tiffany.
Tiffany. I'm
Hey,
sorry.
hey.
I'm in Atlanta. I'm driving, so I may mute you. I may mute myself so I don't give you too much background noise. But I'm in Atlanta.
Okay.
Um, I took a class on mortgage notes, but I'm not comfortable yet just completely jumping out there. And since I'm already a part of REIA, I wanted to, sit in and learn from the experts. So that's why I'm here.
Okay. Fantastic. Well, I operate out of Atlanta, so I'll throw some Atlanta specific or Georgia specific things in as we go.
Okay, cool.
Which is interesting is that it's actually pretty similar in most states. In fact, California and Georgia are similar with respect to the documents that are required. There's just different procedures for collections and stuff like that. But we're not going to get that deep. So I think you'll see that this will be equally applicable to either, no matter where you are. And so I usually like to start off first with, first off, what is a seller held mortgage? So in essence, that's where the seller of a home, either a single family residential or commercial business, agrees to take back, to accept payments over a set amount of time, instead of taking cash from the proceeds, entirely cash from the proceeds of their sale. And you'll see I think in 2019, there were about $20 billion worth of these things originated. So it's a fairly sizable market. It usually shows up in about 4% of all transactions. So not huge. And I mean, as you would guess, it is, they're more popular when the economy is in a down cycle. So it's harder to borrow than when money is, quote, easier. And when I say easier, I mean lower interest rates and credit standards are not so intense, right? So once again, there are two documents there that will be part of all your transactions. So a promissory note is the simplest document, and that is nothing more than it's about 2 or 3 pages. And there's a standard form that just about everybody uses that spells out the terms of the loan, the interest rate, the amount borrowed, late fee, and other terms, including where you mail your payment. That promissory note is not filed anywhere. It's not available except from either the borrower or the lender. The attorney will have a copy in the closing file from the transaction, but it's not filed anywhere, so you can just go open it up on your own. In Georgia, we have what's known as a deed to secure debt. Sometimes people refer to that as the mortgage. It doesn't matter what you call it. It's the document that gets filed in the county courthouse to announce that there's a debt that encumbers a property. So the essence of that is, it's one thing to have a mortgage with somebody. It's a whole nother thing to make sure it gets announced so that other people know, for instance, other creditors, that there's a debt there. For one thing, if you have a first position mortgage, you want to stay in first position, and in most jurisdictions, the first mortgage filed is the one that is the first, right? That's one of the reasons that we do title exams and real estate closings, is to make sure that the lender is getting the security that the lender thinks the lender is getting, and that you as the buyer are getting the terms that you think you're getting. So why would somebody consider seller-held mortgage notes? And this goes to, some of this is my reasoning behind it. One is that it gives you solid yields in the low interest rate environment, which I would call what we are in today, a low interest rate environment, when 30-year fixed rate loans are 2.75%. Investment products that are fixed are very low rate. So treasuries are in the 1.5% to 2.5% range, and 30-year treasuries, are closer to 2.5%. And that's just low. So one of the things that seller-held mortgage notes allow you to do is to create solid yields in a low interest rate environment like we have today. Because what you're doing is you're finding notes that are pre-existing, and then you're negotiating with the people that took back the notes in the transaction to purchase them at a discount. The other reason I like notes is that they're easy to understand, and that typically, assuming you do just even a basic analysis, you have safe collateral, right? So it's either a house or it's a commercial property. It's easy to value. It's easy to look at it. It's not Bitcoin. It's none of this stuff. People are going to routinely need some place to stay and some place to operate their businesses into perpetuity. So you enjoy all the protections that the banks have in our country, and they have a bunch. They have the right to require and do require insurance on properties that are financed. There are also simple collection procedures in most instances for dealing with past dues and those sorts of things. These seller-held mortgage notes may be held in self-directed retirement accounts. The people that do self-directed retirement accounts, so for instance, Advanta IRA is one of our sponsors here at REI USA. They routinely hold these things in self-directed retirement accounts, and they know what to do. The other reason to look at notes is it's a low level of time involvement for you. Once you've found and purchased the note, all you have to do is sit back and collect the payments. And if there's something that's wrong, yes, you have to call and get involved, but it's a whole lot simpler than being a landlord, for instance. And I, as a single family landlord and a commercial landlord now, I can tell you it's a lot easier deal. So typically I just receive, payments. Some people like to do electronic payments. Some people like to mail the checks. Whatever they do, we set up to do, right? So it takes a lot less time to get a little bit higher yield. It can be a lot higher yield. And so note considerations. So when you're looking at notes, what are you thinking about? So where to invest? Geographic considerations. Typically, most of the laws that govern this are state laws. So they're state specific. So when there's a foreclosure in California, It follows all the same rules as every other foreclosure in California. If there's a foreclosure in Georgia, same thing. So in Georgia, state foreclosures are all non-judicial. That means that you don't go see a judge to do a foreclosure. You do file something with the court, and they advertise it for 30 days. And after 30 days, if the thing hasn't been made current, then they cry the house out. They cry the note, what you're owed, out on the courthouse steps, and sell that to the highest bidder, which oftentimes is the bank. Although as of late, it has not been. So in this case, you're the bank. So you may get a house back. Not a big deal if you know what to do. In Georgia, foreclosures are approximately $1,500 to conduct. So it's not something that you need to shy away from. The costs are not prohibitive. So economic considerations are important, very important, because there's nothing more sad than somebody who took back a note on a house in Timbuktu, and nobody wants to live in Timbuktu for whatever reason, probably because there are not jobs there. And then you have a house that's hard to sell if you were in the off chance to get it back, right? And you also want to invest in areas that tend to be growing, or at least are steady. Where you don't want to invest are areas where job growth is not there, where population density is not there. If you're not at least hitting replacement rate, then eventually the place is going to empty out. And I got to tell you, Tiffany, you're in Atlanta, so we don't think a lot about it, but Atlanta is a growth hotspot in the state of Georgia. Many parts of Georgia are barely treading water in terms of economic considerations. For me, the easiest thing to do on this is to pull up citydata.com and look at the population growth rate. They will have that there. If it's negative, you want to give some consideration as to whether you want to invest in a note in that area, right? The other thing to consider is how much to invest and how to divide it. So do I want one $100,000 note? Do I want 10 $10,000 notes? Or do I want two $50,000 notes, for instance? My tendency is to like the smaller notes because there's less competition in pricing. You can usually pick them up at higher yields, but you need to try that on for size. In other words, what is your personal preference? Some people don't like to hold notes on houses that are not nice. And I will tell you that word "not nice" is your definition, not mine. To me, if it's inhabitable, it's nice enough. And of course, the last one is, would you want to own this property if the payer defaults? That one needs to be top of your list, because occasionally defaults happen, and you can insulate yourself from them in a number of ways, but you have to expect that it could occur to you that someone is in default, and you have to figure out what it is you want to do about that. So continue on note considerations. Has the payer been making timely payments? So we typically require the last 6 months payment verification. So whether that comes in the form of deposits or whatever, we want to know about that, right? We want to be aware particularly when we're formulating pricing. Is this note current? Is this note not current? If it's not current, you really need to discount it accordingly, because you're going to immediately jump into the collections business. Not a problem if you are patient and willing to do the work. It's the big problem if you overpay for it. So think somewhere in the area of 40 to 50% of the face value of the note for the defaulted ones, and 70% on up to 90% of the face value for the ones that are paying timely. How long has the payer been making payments? The short word for that is seasoning, right? So if a payer has been in there 2 months, I tend to really want to look at a whole other host of considerations before I will want to own that note. But if a payer has been making payments for 5 years, I think at that point that individual knows how to make payments, expects to make payments, and has made arrangements to make timely payments. What is the investment to value and what equity has been created from paying down the note? So in other words, somebody bought a house 5 years ago and they've been making payments on it and they also had a down payment. So maybe they put 10% down and they paid another 10% down. So there's 20% equity in that house just based on the note payments and the down payment, plus what's gone on with respect to the home's appreciation in the last 5 years. Most homes in most locations have appreciated somewhat in the last 5 years. A lot depends on that location, obviously. But, of course, in California, it's been crazy. In Atlanta, it's pretty much, it's been strong, steady appreciation, but probably nothing like the San Francisco area. So the other consideration is, what's your desired yield? What percentage rate would you accept to have this instrument where you get paid once a month? It's your investment, right? So it's in a way, it's kind of like a stock or a bond or a rental property, right? So let's see, does anybody have any questions or comments as we go?
You may cover this, but I'm curious as to how would you go about trying to find notes for sale?
Okay. So, great question. Tiffany, I didn't even pay you to ask that question, but so we're talking about sources of notes on that next slide. So you can reach out and market for them on your own, which is what I do along with a business partner. We buy note leads from notesellerlist.com, and then we direct mail them. First, we do a handwritten letter, and then we send follow-ups in terms of postcards. That is not a huge response rate. You're talking about 1% to 2% on the mailing, but it's been enough to fill fill up what we're trying to accomplish with respect to it. Another way is to network on Facebook Marketplace and at Real Estate Investment Association groups to find people who may have notes. And what you find out is that there are others that have notes for sale, and there are also people that are note brokers. So they will bring you notes as well. And of course, you can also go directly to bank institutions for defaulted notes for a listing of institutions along with their note default rates. You can go to usbanklocations.com. You can also look in your legal notices and see where there are notes in default, if defaulted notes are something that you think you may have interest in. But by far and away, what we've done is the direct approach. Now, there's a note website that we'll talk about called paperstack.com. And I think that's in the presentation, maybe. No, okay. So paperstack.com, paperstac.com is one among many note websites where you can actually buy notes. So you can go on there and buy a note. Look, you can search by jurisdiction. So if you want to buy notes in California, you thought about it, go on there, see what's being offered. But there are other websites too where you can buy notes. I happen to like the direct approach because I tend to get, better yields, but then I also have to do more legwork, right? But I would much rather do my own than necessarily go through a note wholesaler. Just it's personal preference more than anything. I like to deal directly with the owner myself because I just found that works better for me. But that's not. You may find it a different approach works better for you. So one of the things, you're welcome. One of the things that I like to do in every one of our little sessions is to go through time value of money calculations. So if you don't, there's these little calculators, these financial calculators are like $25 at Office Depot, or you can buy a financial calculator that you can download to your phone. Either one does the same thing. And these calculations are not very hard, but once you know them, you can also apply them to your other investments. And so we're going to talk a little bit about how we use those in the note business, because you kind of need to understand what your yield rate is and what you're shooting for, what your yield rate is. You're going to want to check and make sure that the payments are accurate, because you're going to have some paperwork, but you're also going to want to just check it out. Right. So when you look at the calculator, there's really only 5 buttons you got to get for this mortgage business. That's how easy it is. N is present value. PV is, for our purposes, is the current mortgage balance. Future value is likely to be 0 if you're buying an entire note, because when it's paid off, it'll be 0. N equals number of periods. That is typically months for us, because most of our mortgages will be monthly payments. And I is the interest rate per period. So not the annual interest rate, but the interest rate per period. PMT is payment per period. So that's typically going to be the monthly payment. And you're going to want to check this out when you do that stuff. So got an example here for you. So this is from Georgia. This is from South Georgia, in a pretty nice little area called Quitman, where it is Quitman, Georgia, is in Brooks County. It's just off Interstate 75, nearby Valdosta. Pretty prosperous. It's a county seat, which I really seek in areas that are in the country, as it were, because I know that that's the seat of government and tends to be a lot going on. There's a hospital there. There's a lot of other employers there. So if I'm getting out in, far away from larger cities, which most of Georgia is, for instance, I'm looking to see about, what's going on in the area. Now it has a healthy economic situation, and it's backstopped by the fact that the county government is located there, schools, hospital, large employers. So we were approached. This call came in from someone who received a handwritten note from us. We bought leads from notesellerlist.com. And so she came to us with this. This loan was originated at $45,000, 170 payments. So 14 years and 2 months, kind of a weird little deal, right? So for some reason, we wanted 170 payments. You can customize these notes, and this lady did. She's charging 8% annual, which is pretty typical with respect to people who take back mortgage notes, because most people would prefer to get the entire payment up front. So there needs to be a little premium for them, right, when they do this. So the first thing that we want to do is calculate the monthly payment, knowing what it is that we know from the data that we receive, right? So we're checking this thing out. So you input $45,776.83 into present value. You input 0 into future value, because it's going to be 0 when it's paid off. You input 170 periods into N. That's the number of periods over the note. And then you input 8 divided by 12 into I, because the 12 takes that annual interest rate and converts it to a per period interest rate. So 8 divided by 12. So 0.75 per month, or 8 divided by 12. Then you hit compute payment and you get $450 per month. So now you want to look at and determine the current principal balance of the note after the most recent payment was made, because typically what you're doing is you're reaching out and you're attempting to buy the remaining payments on the mortgage note. So in this case, there are 170 payments scheduled to be made. 77 have been made to date, which means there are 93 payments remaining. So you input 93 into N, and the calculator knows that you're looking at payment 93, right? So this is, it just kind of knows this is its nomenclature to know, right? And then from there, you punch in compute present value because it's not the same value. It's been paid down over the 77 payments over time. And when you do that, that gives you a remaining balance of $30,688. That number is important because it represents the present value. And this is basically what you're going to make the offer on. And in fact, you're going to head back into your calculator in just a second and try to calculate based on your desired yield, what your offer price would be. So the question then is, what rate of return would you want to buy and service this mortgage for the remaining 93 payments on it? So I guess that's almost 8 years, so 7 years and change. So let's say that you desire 15% yield. This is where we start. So you input 15 divided by 12, which equals 1.25, and punch the compute present value. So what you've done is you've changed that interest rate from 8 to 15% with this calculation. And when you do that to compute the present value, you basically have reduced the the present value that you're willing to pay today for it. And so that desired rate of return means you offer $24,661 for that $30,000 note. And that gives you a 15% yield from the time you buy it to the time it's paid off in full when it matures in 93 months. So let's talk a little bit about that time value of money calculation question. Any questions, comments, or concerns on that? I know it's kind of fast, but I want you to see the math and be able to practice it.
Just a quick question. Were you saying that this is a non-performing note, right?
This one was performing. Mm-hmm.
This was performing. Okay, got it.
Yes,
Okay, cool.
Mm-hmm.
Okay, cool. Got it.
Yeah.
Well, that answered my question because I was thinking if it was non-performing, because I remember I heard you say non-performing, you would offer 50%.
Yeah, I think.
Okay.
Yeah, so when it's non-performing, you kind of have to decide, right? Like you have to make just an informed decision, right? So I don't know. I think we agreed, my partner and I, 25 to 30% yield for non-performers, because you're going to have, if they've been non-performing for a while, you're going to have to get in there and you might have to go a little in your pocket to make that thing work. And usually they'll recover, or maybe you do a workout and take a deed in lieu of foreclosure. That would be the same transaction in California as it is in Georgia. Someone signs a document, says, here, this house is yours now. Right. And so there's all kinds of ways to do a creative transaction that can benefit everybody. So I talk about foreclosure and certainly have done them in the past. It's not my favorite thing to do because I'd rather come up with a triple win situation that gets them out of the situation. And I just soon have the house as the payment because I'm a landlord. So, and I think I know what to do as a landlord. I've been doing that for a while. So anything else on that? So another option is, so let's say, what if the seller, so basically in our last example, right? So we said this thing is currently $30,688. We're going to offer $24,661. So you can imagine what the first objection is to that number is. You're asking me to take a discount, right? And yes, we are, because notes are very illiquid. And in all probability, you likely have a standard where the borrower is not A/B credit, probably maybe non-standard credit, right? Yeah. Now you may not care, but others who purchase mortgages do. So the reason you ask for the discount is you are going to hold it to maturity, and there's probably some work you're going to need to do in there along the way, right? So we typically don't pay at the note rate for that. You can though, if you're satisfied with 8%, you can offer to pay to the penny what the principal balance is there. But let's talk about something else we can offer others, which is, how about considering offering paying for a portion of the note? So in other words, say I want to buy the next quarter of the remaining payments for a quarter of the principal balance. And Mr. Seller, you won't have to take a discount at all. What that typically results in, and I'm not going to do the math on this call, but I would encourage you, if you go in to make offers, that that you include partials as part of the discussion. I will buy, in this case, so we know we got 93 payments. So let's see what that looks like. I've got 93 payments. So if I give you 25%, so 93. So that's the next 23 payments, right? Is a quarter of the remaining payments. And I will give you the principal, a quarter of the principal balance for that, which in this case, it was 30,668 or something like that, right? So I will give you $76.67 for the right to collect those payments for the next 23 months. That puts them in a situation where they don't have to accept a discount. And they're typically happy about that. But believe it or not, it makes that note rate, that makes that rate of return that you get about 4 times what that note rate is. So that is closer to a 32% yield. Now, I'm not going to try to explain the magic math to it, because other than to tell you it's not algebraic, it's exponential, and it has to do with how mortgage interest rates are calculated. This approach also works for a half. So you could offer to do 46 payments. That would be at, let's see, 76.67 times 2 is $15,334. So in that case, that note rate is 16%. And I'm going to let you do the math on that. But your yield to its maturity would be 16%. So that's some way to offer additional items. So there's a million ways to do partial note offers. I'm not going to get into those, other than to say that when you get into making note offers, you want to have a few options. You don't want to hit them with 47 options. You might maybe just 2 or 3, right? Because a confused mind always says no. And the more options you add, the tougher it is. We'll also say that when you, oh, good. Okay. So I put it over here. I'm sorry. So here's some of the math. And so I would just say that one of the things about this business is very few people will sell to you on an impulse. It's a lot like big ticket items. They'll sell to you after you've touched them a couple of times, right? Whether it's through additional postcards or conversations or what have you. So you get yourself ready for the fact that most times the first call is not going to be the last call. I don't know if that makes any sense. So it's much more akin to selling a big ticket item, which in all circumstances, to me, $7,600 is a big ticket item. I know some people say that's not a lot of money. I disagree. I think $7,600 is a lot of money. If I found it in my mailbox, I'd be very happy, right? So there's that. And let's talk about, suggested follow-up for those that may be interested in getting a little more active. Consider doing your own marketing for notes in your area of interest. Go to paperstack.com and see what notes are available in your area of interest. So they've got performing and non-performing. So the ones that they're paying and the ones that they're not. You'll see lots of neat things on there, right? And They will tell you what the yield is based on the price that they're asking for the existing loan. And most of those things are negotiable. I will tell you, I have sold a note on PaperStack just to see what it was like, and it was a flat out freak show. Everybody was trying to hit me for discounts and stuff like that. And I finally agreed with one gentleman. He got a slight discount, but nothing huge. His yield was somewhere around 12 to 15%, but we had bought this note on an impulse sale from a guy who was trying to raise money to buy his girlfriend jewelry around Christmas, it's a great time to be doing this because what individual doesn't need money around Christmas to buy their loved one jewelry. So anyway, but I would encourage you to go take a look at paperstack.com just to check it out for your area, right? And in other states too. Don't be bashful about looking at other states that abut your areas. So if you're in California, maybe you're close to, or maybe you know somebody in Utah or Washington State or whatever. Feel free to take a look outside of your geographic area of interest. I happen to purchase pretty much exclusively in Georgia, although I'm flirting with the idea of Alabama and Florida. Florida has a lot of these transactions, and that's why I would consider Florida. One thing I don't like about Florida is they have judicial foreclosures, which means you got to wait to get in court to get your foreclosures done. I don't, when the courts decided they wanted to close, that was not cool for those folks that were holding down there. But everything has its things that you need to be aware of. But I would tell you to go look what's out there. There's a lot of websites. If you just punch out Google seller held notes for sale, you'll get hit with an avalanche of websites. Go look at them. I know PaperStack is a good one, and it's a trustworthy source. I don't know as much about others. PaperStack was the original one, and so it has the benefit of having been in operation for, I want to say, on a decade, something like that. But in any event, so with that was kind of, if we can help you, reach out to me. That's my phone number, my email address. Our website is notesandliens.com. Feel free. We're happy to help you any way we can. We want you to be successful in the note business. We have friends that are note brokers, and we share deals actually, because there are some things that we like that someone else doesn't like, and vice versa. So with that, does anybody have any additional questions, comments, concerns, or discussion topics they want to cover today?
Will we be able to get a copy of this recording?
Yes, it's recorded on REI USA.
Okay, so just go to the website. Okay, perfect.
That's right. And I'm happy to email you this presentation if you want.
Okay, cool.
Yeah,
Yes,
just tell me.
I'll definitely be in touch. I feel like I'm ready, but I'm nervous, but I'm ready.
If you're nervous, you're ready, right? There's nothing wrong with being nervous to get started. But do you own any rental property?
Yes.
Okay, so you remember how you were nervous the first time you bought a rental property?
That's true. Very true.
Man, I bought my first rental property was in the mid-90s. And I remember I was so nervous, right? I thought, man, this is going to fall apart on me. I'm going to have all these problems. And of course, I found out the same thing you found out, which was it wasn't no big deal, right?
Yeah, you're right.
And I say, only reason I say that is because that's the way notes are. You can be like, oh man,
Okay.
this is a different game. I'm out of my element and everything like that. But once you've gone through the process, you'll see it's not that bad.
Okay, cool. Thank you.
You bet.
Thank you, Scott. I'm going to definitely do some more research on PaperStack since I am in the Bay Area. I find it a bit more challenging, but I think I can get some good leads here in San Francisco area.
Definitely. And I tell you, LA REI out there, the guy that runs that is a notes guru.
Okay.
And he has free, they do like a meetup online, and those things are free. You don't have to join the association to go, and they routinely have note folks on it. And he does note classes actually. And
Oh, wow.
now I don't know if he's in the Bay Area. I know he's in Los Angeles, but he does good classes that are California centric, as they should be, right? I mean, that's where he does all his business. The guy's
What's his name again?
Yeah, it's LA REI is the it's like a meetup group, just like we have a Georgia
Okay.
REI.
Yeah.
His name is, let me see if I can find. I don't know why I can't remember him off the top of my head, but I can't. Let me get him. Give me just a second. I enjoy listening to him. Very creative guy. Search LA. There he is. His name. Bill Tan. BILLTAN.
Thank you.
You bet. And he's got some great classes. Like he's got a whole class on how to work your calculator. Which
Okay.
I know you laugh at that, but I promise you, if you'll invest the time, it's worth your time. I promise you. If you do it, you'll be so glad you did, because not only does it work for calculating note yields, it also helps you calculate yields on investments, including wholesale. So
Okay.
you want to know that because you want to know what efforts yield you the most return to your time, right?
Right.
And you'll figure that out, and it differs for different people.
Right. Thank you so much for the information and your
Oh,
time.
you are most welcome. Let's see. Anything else today, guys?
No, I'm
Nothing
good.
else so far.
Awesome. Well, thank you for spending your time with me. I know it's lunchtime, and you chose to spend it with me and talk about notes. Hats off to you for investing time and learning something new, and supercharging your business. Because as you said, REI USA is a great place to do that. I have really been enjoying learning about a lot of things that I don't have any knowledge about. And it's a good deal. So all these REI USA events like this are they are archived for, I think, 3 months. So if you see something and you can't, for whatever reason, if you can't make it or you didn't make it because maybe you weren't a member 2 months ago, you can go back and watch it.
Yeah, I love that about REI.
Yeah.
So cool. I've gotten so much information. It's great. This is my first time hearing any information on notes. So I'm going to definitely explore more with the notes.
Definitely check it out. Check it out. And
Yes, for sure.
that business booms even harder when the economy goes in the tank. Not that
Okay.
I'm not making any predictions, because I don't think it's going in the tank, but it improves, right? It's up and down based on
As everything is,
that. That's right. So if you want to sell a house and money's tight, you're gonna take a note. So,
Right.
or there's somebody you want to sell to and they just can't. That the mortgage qualification criteria, I got to tell you, it's a travesty, because it doesn't have much to do with people who can make payments, right?
Right.
That FICO score, I know tenants that have got terrible FICO scores, but they're amazing people. They work hard, and they got hit by a bankruptcy or a medical issue.
Right.
Medical bills are the biggest cause of bankruptcy in the country. So why would I hold that against somebody? But if it takes your FICO score to below 680, there you are, right?
Right.
And a lot of people won't do that, but you can look at them as an individual and be like, these folks are solid, man. I'll make that loan. Better yet, I'll buy that loan. So, and of course, you can own or finance your own stuff too. I've done that. The only thing I don't like about that is I can't get as high a yield as I want to get, right? So I can only, with this, you're negotiating with a third party and you're adjusting the amount that you're paying for the mortgage to get the rate that you want. It has no effect on the terms of the mortgage, right? It's just it's a transaction between you and the owner of the note. So
Got it. Thank you, Scott, so much.
that
We'll be on next time with you again.
sounds great. Well, I look forward to it.
So do I. Thank you.
Okay, thank you.
You're
Thanks
welcome.
again.
Have a great one.
You also.
You too.
Take care.
Bye-bye.